Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla, let's go over the market, let's figure out what is happening and what we can expect moving forward as per usual into the final week of December and potentially a Santa rally, fingers crossed. But with all that being said and done, the market's closing in just a few minutes here. Tesla closing down about 0.8 or so percent on the day, putting us at about $252.50 per share. Compared to the market, slight underperformance, but nothing substantial. So let's jump into it and let's discuss what we can expect moving forward. By the way, obviously, don't forget that Monday is an off day for Christmas, right? For the holidays. So take that into consideration. If you enjoyed the video, don't forget to hit that like button. And again, my membership section on YouTube is live. The link is below. $3 a month. You get access to all my intraday thoughts, updates, etc. on Tesla throughout the day as it's trading, as it's moving. But let's just jump into it. So what can we make out of this whole situation? So there's a few things, right? The extreme short term, like very, very, very short term, I'm a little bit more skeptical, but overall Tesla's still looking decent. Honestly, it's not looking too bad. So let's start off with, let's do the daily first. Let's start off the daily first. So this is the main time frame. This is probably the best time frame to look at just really any stock, at least in my opinion. The daily is probably just the most, like, if you can eliminate, if you have to eliminate every single time frame and you can only look at one, if you're a swing trader, of course, I think daily is the best, right? Because it just gives you the best looking kind of picture of an idea. So taking a look at this daily here, obviously we have a pretty obvious picture here. We had a massive bull flag. We obviously broke out on this massive candle. In my opinion, we haven't retested yet. Some people said we have. If you really draw the trend line, the resistance, like really just like the top like this, like really just barely touch the top of each candle, like barely, like just barely, like, you're not even touching these ones over almost, maybe you can argue that we retested it on this massive red candle, maybe, but like this is just, I don't know, I don't like doing this. To me, the more candles, at least the more wicks of candles that you touch, the better the trend line is, you know what I mean? So that's why I look at it. So that's why I have mine as is, because it's pretty much touching as many wicks as possible without any of them actually closing above it. But nonetheless, the point I'm trying to say is this. We're in this potential rising wedge here, right? The rising wedge start off with, of course, this blue line, which again is also an example of how I'm not a huge fan of touching like this, but in this case it works because yes, it only touches one of these, because this, don't forget, the blue line acts as the bottom of this overall massive ascending channel that we were in before, right? It only touches like this one little tiny part here, which is unfortunate, but it works because technically it also touches quite a lot of the wicks over here in this current rising wedge that we are in. So it kind of makes sense, and it is seemingly acting like as a resistance here, a bunch of times just in the past few days, like, or this week really. So it kind of makes sense. And then of course we have the bottom trend line over here, right? Which of course now here, those two lines make the ascending wedge, right? We had a support, some false breakdowns here, bounced off of it like a few times even this week as well, and it's getting tighter and tighter and tighter. Now the thing with these ascending wedges is, again, like I said before, technically they're bullish while inside, bearish while outside, because more often than not you break out to the downside. So I'll quickly reiterate this one more time. We talked about this in yesterday's video, but they essentially usually go like this. Just, again, doesn't mean they always have to. It can absolutely do the opposite, right? It absolutely can still, blah 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 blah, do its bounces and then break out to the upside. That is absolutely a possibility. So just take that into consideration. Nothing is guaranteed, but more often than not, it is to the downside. If it is to the downside, I believe that is what's going to really give us that kind of very low 240s retest of this overall bull flag. But with that being said, while we're still within this ascending wedge, which obviously we are at the very moment, Tesla's technically bullish. Like it's hard to look at this and be like Tesla is bearish. Even if we break down from this, I still think it's overall bullish. I'll explain soon why that is. But specifically, while we're especially, I guess, in this overall ascending wedge, I think Tesla's bullish. I don't think it's bearish. I don't think it's necessarily exceptionally bullish, at least as of right now, because we're still getting rejected by this exact same level over here. We'll talk about this time frame soon, but it is definitely more bullish than bearish. There's no question about that. But it's just getting rejected at the same level over and over and over, and it's kind of following through some certain things on a smaller time frame. So let's jump to that next. But again, the thing I want to mention is, even if, which I think we will, I think there's an okay chance we will actually fall out of this, the bottom blue line essentially, which is about 250 right now, right? Even if we do fall out of that, I still think Tesla's bullish. Why? Because all that's going to do is essentially truly come down to retest this breakout of this massive bull flag, which is a very bullish thing to do, assuming we of course bounce and hold, right? Or hold and then bounce, I guess. And of course, we have the 21 EMA support under us. We have the 100-day support under us. I think we even have the 50-day. That's actually a little bit below, but we have the 21 and the 100-day 21 EMA 100-day moving average support under us. That should be acting as well, obviously a support. So that's kind of what I'm expecting to see, right? If we do come down to that, low 240s-ish retest of that bull flag. But again, even if that were to happen, I still think Tesla's overall bullish because we're still broken out of the bull flag. And I only will start turning more bearish, a decent amount more bearish, if we fall back into this massive bull flag, which is essentially going to be into the closer to the mid 230s roughly, and we start closing daily candles at that general level. That's when things are starting to get less convincing, let's just say that. So moving over to the 65-minute next, this is where I talked about the very, very short term. So the 65-minute potentially had us in this potential rising triangle, right? But there's two things to note here. So first, let's talk about this weird little green line that's kind of in the middle of everything else, right? What does this mean? So the way I'm looking at this is, we had this massive rally and then we kind of started ascending slowly, right? Usually when you start ascending slowly like this after a massive rally, it ends up usually with a fall such as this. Usually when you have a massive rally, you want it to actually go essentially to the bottom right, because that's essentially creating a potential bull flag, or at the very least sideways. But if it's going up and right like this, that usually implies that it's going to at some point break down, right? Because it looks, again, just a rough example, it's not perfect, but it's kind of like a similar ascending wedge, if you will, almost like this, you know what I mean? Similar to like what I was talking about just now, if you take this green line and this green line, it's kind of making us getting tighter, and then it breaks down. Kind of the same concept as what I was talking about on this daily-ish, right? Sort of. But the point I'm trying to make is the fact that we obviously broke down, right? And we had a potential retest over here as well. So rising, broke down, massive candle, bounced, had a retest. So far, it looked like it's pretty much almost a perfect retest of this breakdown from this green line that I just talked about. And then, of course, potential continuation to the downside, which is so far what seems to be happening. We are below the 21 EMA now, closing candles below the 21 EMA on the 65-minute, which, again, not the worst, not the best thing in the world that happened here, and we still went above it. So, I take those with a grain of salt, but I look at the structure, and the structure to me is also a little bit concerning here short term. And the reason I say that is because, again, another potential pattern that we might have been in is this potential rising triangle, right? Where, again, massive rally up, sideways, making higher lows, and then obviously getting rejected at pretty much the same level over and over and over, once, twice, thrice, right? And then now, of course, we ended up finally breaking down out of this potential rising triangle, right? With this recent candle or two right here on the 65-minute, which isn't great. Obviously, this can be a false breakdown. But statistically speaking, it usually isn't. Obviously, it can be, but again, all about statistics, all about probability. There's a more likelihood that it isn't than it is, obviously. So that's why I'm looking at this. I'm going a little bit, not looking the best here, right? This is why, again, even taking into consideration this kind of pattern, this ascending wedge, they usually break down to the downside. Not always, but usually, which again kind of lines up with this potential weakness that we might get some follow through with this a little bit of weakness next week. Again, if we break below 250, that's when this also falls down before as well, right? This blue line, the 250, we fall underneath that as well. And that's when I think that 240, actual 240 retest is coming. I still think that's a pretty decent chance that it does come. I don't think it's impossible. And if we break below 250, I think the chances of that increase substantially. But again, as long as we hold 240, I'm still overall bullish. Now let's take a look at the weekly very, very quickly. The weekly over here is looking not as good as I was hoping, I'll be honest. So MACD is still flip bullish, not convincingly. It's just the slightest bullish flip you can ask for. It's technically there, but it's not very convincing, I guess, is what I'm trying to say. That's number one. So technically still good, but not very convincing. Second thing is we did close finally a red weekly candle, which in a way is a good thing to see. You could only have so many green weekly candles in a row. So we did have a red weekly candle, but what that does imply is the fact that, well, we did close lower than last week's closure, which, does show a bit of sign of weakness. That's not the most ideal thing in the world. Thankfully, similar to this MACD, it's also not the most convincing red closure candle, mainly because it's not that much lower than last week's close. The one thing that might be concerning here is that this might actually have potentially been a doji candle. Now, doji candles, I believe I talked to you guys about this the other day, but it's essentially looking like this, where you have a pretty much long wicks and the close and open is very close to each other. And you can argue this is that, right? This is that long-legged doji, right? Could have been a little bit of a tighter close, but it's not that far from it. So this usually, not always, but usually is a sign of a reversal. So we'll see how that actually goes and how that plays out next week. Don't forget, it is, of course, Monday is an off day for the market. So, I did sell some calls against my shares as a hedge, especially with Monday being off. Get that extra theta decay, which is nice. So once Tuesday starts, even if Tesla opens at the exact price as it closed right now, like literally on the dot, I should still already be up, mainly because there's just that much less time, of course, for the Friday, which I did sell a weekly for the Friday to get to that certain price target. So we'll see, of course. But even if I'm forced to sell, I'm not too worried because I'm selling it at what I believe is going to be a level we'll probably reject that even if we do get there next week. So yeah. But that's the main thing I'm looking at right now. So pretty much all in all, easiest way of thinking about it, we're in this rising channel. If we break below 250, we fall out. I think 240 guaranteed, not guaranteed, but I think it's a high likelihood that we come for the retest in the 240s of this overall bull flag, and that's great. If we don't go below this, then that's obviously ideal, as long as we're still inside this ascending channel or wedge. And the bulls, what they want to do is, while we're still in this ascending wedge, assuming that they can maintain control here, is to really break above 258 to 260. I think that will unlock the potential to go up to 265, which to me is probably the most important level. And then if we can break above that, I think that's when the potential squeeze for Tesla can begin. So that's kind of how I'm seeing it, and that's kind of what I am thinking. So let me know what you think down below. Thank you so much for watching, and I'll see you for the next one. Peace.